All right. Good morning, folks. Happy Thursday. Thank you, Maria, because I was trying to think of what day it was. Director of Data Science at Cabbage. We love Cabbage. Maria, Catherine from Cabbage just did a FinTech Insider with us a couple days ago. I love Catherine, one of my favorite people. We love Cabbage, everybody. Both the vegetable and the company. They're both really good. Good to see everybody. Grab some coffee. Get an espresso. I don't care. Whatever you need. I've got mine. Thank God. I need it this morning. This one's going to be a fun one because we're going to be talking about credit unions today, everybody. So we're going to enjoy this. So with that, let's jump in. Good morning, everybody. Welcome to the 54th episode of FinTech Insider, the Breakfast Show US. I am Sam Maul, 11FS Managing Director, North America, and I will be your host for this show. And this morning's show, we really want to know where you're at in the world. I know Dr. Abdullah is already in from Saudi Arabia. How you doing, Dr. Abdullah? We've got folks in from the UK, up in Manchester and in London. We will not talk about Arsenal football, although please note, I did get the score right. I predicted 3-0. So there you go. That's what we always lose to Man City by. Let us know where you're watching from. Click that share button. So if you look down there with all the little emojis are, you see that share link. Click on that. Get it out there. Let your network know that you're watching this. Smack the like button. And please do subscribe to 11FS on LinkedIn so you never miss a show. And again, if you haven't read our latest research report yet, the link will be in the post here. Bianca will get to that, but it's really fantastic. It's about the needs of SMB owners in the U.S. and how financial institutions can make propositions to better serve them. Head to bit.ly/DIGITASMB or click the link in the post. We also released a great research report in conjunction with Plaid about how open finance will shape the industry. And we talked yesterday about the difference between open finance and open banking with Adam Davis. You can go out on YouTube and see that show. You can get that report at bit.ly/openfinance2020. All right, and with that, let's get to 3 news stories over the past 24 hours that caught my attention and should have yours. The first one, and it's actually a pretty sad story, to be honest. Forbes reported a 20-year-old Robinhood customer died by suicide after seeing a $730,000 negative balance on his account. Now, please note, I'm choosing not to name the individual, but like so many others, this young man, about basically a college student, he took up stock investing during the pandemic, signing up with the millennial-focused brokerage firm Robinhood, which offers commission-free trading. And it's a fun and easy way to use mobile app and even awards new customers with shares of stock. I am a Robinhood customer, by the way. During the first quarter of 2020, Robinhood added a record 3 million new accounts to its platform. As the COVID-19 stock market swung wildly, this young man began experimenting, trading options. And in his final note, right before he committed suicide, he was filled with anger toward Robinhood, said that he had no clue what he was doing. In fact, a screenshot from his phone revealed that his account had a negative $730,165 cash balance displayed in red, although it may or may not have represented uncollateralized indebtedness, to be frank. And just basically that was his temporary balance until the stocks underlying his assigned options actually settled. Silicon Valley-based Robinhood is not sharing details of the account, citing privacy concerns, but it did state, all of us at Robinhood are deeply saddened to hear this terrible news, and we reached out to share our condolences with the family over the weekend. So bottom line, know what you're doing, all right? I mean that. Parents, make sure you educate your kids on the market and on investing, and if you don't know what you're doing, use an advisor. I'll just flat out say that. Great product. It's interesting, the downstream effects, though, that we're seeing from democratizing finances for people. And this is a great example of it. Second story, The Guardian reports the massive waves of layoffs in the wake of coronavirus pandemic continued last week, with another 1.5 million people in the U.S. filing for unemployment, despite U.S.-wide reopenings and signs of improvement in the U.S. economy. Over the past 3 months, more than 45 million Americans have filed initial unemployment claims as businesses have closed their doors and consumers have gone into lockdown. Last week's layoffs were just 58,000 below the previous week's level, which was revised up by 24,000 to 1.56 million. The pace of layoffs has slowed sharply since the peak in the week ending April 4th, with the stunning 6.6 million people filed claims that week. But they still remain historically high. Before the COVID turned out, the number of claims for 1 week was 695,000 in October 1982. That's me staring off at the distance because I remember 1982. So almost 700,000. Then, well, we hit 6.6 million in 1 week. And finally, Fortune reports Wirecard, the German payments firm that's fending off allegations about its accounting, delayed the publication of its annual financial results for the 4th time after auditors were unable to find about 1.9 billion euros, which equates to about 2.1 billion in cash. So just a little discrepancy. The shares collapsed. Ernst & Young was unable to confirm the location of the cash balances in certain trust accounts, and there was evidence that spurious balance confirmations had been provided. Wirecard said in a statement on Thursday that about a quarter of the consolidated balances sheet total. It's currently unclear whether the fraudulent transactions were to the detriment of Wirecard. Basically, they have no clue. Let me just say that. They don't know what in the world happened. They're still looking. The stock dropped as much as 67% in Frankfurt on Thursday, the biggest fall on record and one of the largest for a member of Germany's prestigious 30 company DAX stock index. So, accounting matters, people. All right, with that, let's bring in our guest for today, Ben Maxim, which, by the way, Ben, you have the coolest name in the world. It sounds like somebody, I don't know, that like Stallone would have played back in the 80s. Ben is the Assistant Vice Principal of Digital Strategy Innovation at Michigan State University Federal Credit Union. In today's show, we're going to talk about Ben's work within digital innovation and how customers will change post-pandemic. Ben, how are you? You're in Brighton, right? Brighton, Michigan?
Yep, I'm in Brighton, Michigan.
All right, so I grew up in Detroit. Ben and I were talking before the show about that part of the world, and I think we should give a shout out to Michigan. In the U.S., Michigan is one of the top 2 states to not bend the COVID curve, but absolutely crush it. I think you said you only had 2 cases reported yesterday.
2 deaths and 200 cases. Yeah, so doing great. Yeah,
and Michigan is a incredibly populous state. Everybody, I'm here in Florida where we're starting to hit about 3,000 cases a day, new cases a day. So a shout out to my home state where I grew up for doing an incredible job, and hopefully y'all will stay the course with this. Ben, if you don't mind, us a little bit about who Michigan State University Federal Credit Union is.
Absolutely. So we're a credit union that was founded in 1937 by professors out of a desk drawer at the university to serve our members, the university community, with loans through the Great Depression. So have a long history of helping out members and getting through some of these difficult financial times. And we've grown over the past 82 years to become the 3rd largest credit union in Michigan and the 46th largest credit union in the United States, serving over 300,000 members with over 5.3 billion in assets. So we've come a long way since our humble beginnings, and really try hard to focus our efforts beyond just serving as a financial institution and providing banking services to our customers, but really our members. But providing a great place for our employees and our members and our community partners to live and work and make the communities we do business in better for all of us.
I mean, that's a massive credit union, actually, when you think about that. There are, how many credit unions are in the U.S.? There's thousands, like I think 4,000, 5,000.
I think it's about somewhere between 4 and 5 now. Yeah. There's been some mergers in there, but yeah.
Yeah, I mean, so there's an amazing number of credit unions in the U.S. So to be 46 out of 4,000 plus, not bad. Well done. And also not, Lansing, Michigan is not exactly the size of a Chicago or Detroit or anything like that, right?
Correct.
I mean, so to be able to do that, I mean, how many students go to Michigan State? Do you know how large the population is?
I think it's 45,000.
So a lot more than I remember. And not to brag, everybody, but in 1984, I sat on the bench, but on the Class D state champions for basketball in Michigan. And we played at Michigan State's basketball court for our semifinal game, by the way, Ben. I didn't see a second of playing time. I did layups.
That's good. That's good. You're on the court.
I was a 5'7" short little bugger who loved basketball, but it wasn't going to happen. But I do have a state championship ring, so that's all that matters.
That's cool. That's what I got.
Hey, there you go. Which my daughter is looking at me right now going, "You're such a loser." Thank you, Alex. I love you too. If you don't mind, for our audience that's not in the U.S., can you talk a little bit about what makes credit unions unique in the U.S. as compared to, say, like a community bank, right? Well, how would you define what a credit union actually is?
Absolutely. So we are a community-based financial institution, but we operate on a field of membership. So our customers are our members, and they all own an equal membership share in the organization. So we really are, our members are our owners, and we are modeled in a way where we don't return dividends to our shareholders. We return value to our members through investments in the community with lower loan rates, higher interest rates, and really try to provide them what they need to succeed financially.
And credit unions, I used to talk about this a lot on stage. I've been a member of a few different credit unions throughout my life, right? I'm still a member at Navy Federal Credit Union, as an example of it. The service that credit unions provide to its members, and yes, that is a term you're going to hear Ben say 1 million times in the next 20 minutes, because they're not customers or consumers, they're members of a credit union. It is that credit unions particularly are known for knowing their customers, right? And the services you provide as a member. So,
absolutely.
So then the question comes to, how do you do that in the digital age?
Absolutely. So we have a wide range of members. We have the people that have been with us since they were in school in the 80s or 70s or 60s, whenever it was, and they've been with us the whole time, and they expect us to be that local community institution where everyone knows their name when they walk in, and they know everyone's name in the branch. But then we also have several generations of people have come in expecting digital to be at the forefront. They compare us to Bank of America, Chase, Wells Fargo, the services they get through the big top tier banks, and expect us to be able to do the same. And we try to be nimble, and we have a robust in-house digital team, IT team, development team, and UX. And we do our best with the roughly 40, 50 individuals we have working on those platforms every day. But someone like a Capital One goes out and buys an entire UX firm when they want to dabble in UX. We were able to hire one person, and we do the best we can. And we, by not selecting just vendor products but choosing to do everything in-house, we have the opportunity to be more responsive and have a more tailored and customized solution based on our members' needs. And they are very responsive. They really appreciate when they call us up and we're able to actually make a change to our digital platform. That you're not going to get that when you call. You're not going to call someone at Bank of America and ask them to change the interface for you.
No, it's not going to happen. So let's talk a little bit about this, because none of this stuff is easy. We'll just flat out say that, right? It's not easy to be blatantly honest, to do innovation at Bank of America. It's not easy doing innovation at MSU, Federal Credit Union either. It's just differentiating, say, scale and capital. So let's talk a little bit about the innovation program that you're working on at your credit union. So I show us say you have 4 components. So there must be 4 components. So what are the 4 components of your innovation program?
Absolutely. So the first component is identifying partners, both in the fintech space and other innovative startups. We are trying to focus at least a portion of our investment and support to local Michigan-based startups as well, because there is
good for you.
A small and growing startup community in some of the areas around town, such as Ann Arbor and Detroit. And then we also have a couple that have grown out of the MSU community as well. So trying to support them and looking for those partners to provide us a leg up and acceleration to some of our strategies. So we don't always need to create everything from scratch, but they give us a starting point. We can integrate them in with the digital platforms that we have created. Also working on building out an innovation center where we're going to pull in cross-functional teams from across the organization, give employees a chance to be a part of the innovation, share ideas. You never know where those bright ideas will come from. So we want to get a range of them. And that innovation center will both create novel in-house solutions from scratch based on some of our ideas, and then also evaluate some of those fintech technologies and see where they fit. And we're going to run pilot programs through there to try out the technology, get some insights as to what works well with it, what doesn't, what do our members need. We're doing a lot of research surrounding that as well, and engaging with our members early and often to figure out, is this the right solution? And if not, we don't sign that 3-year contract for $1 million, hundreds of $1,000s. We cut it off there, don't invest any more time in it, and then move to the next thing. So we're really trying to focus and be smart with our investing in partners and resources like that. And then third way we're doing third component of the program is in supporting the industry, university, and vendor innovation groups. We participate in a number of them where we provide our thoughts, our resources, our thought work to help them be successful. Because if the industry is successful, if our partners are successful, if the university community is successful, we ultimately do better as an organization as well. And we are able to provide a better service for our members by our partners being stronger, by our university membership being stronger, and the industry being stronger as a whole. And then also the fourth and final component is something I'm actively working on right now, is revamping our employee idea submission process, where we're trying to make it more collaborative. We've had something in place for a number of years, but it was created about 15 years ago. It still functions like it did 15 years ago. So we're trying to modernize it. We're trying to make it more collaborative and really provide an opportunity for the employees to be engaged in what actually gets worked on from that, and allow them to vote on the projects that go into the Innovation Center versus a committee choosing what gets picked.
So I just posted a comment out there for everybody that's watching this conversation go on. And Ben, don't give the answer because I know you know the answer.
Okay.
Anybody want to guess the average age of a U.S. credit union member? So we're going across to all credit unions, their average age. And I will reveal that in a second. What I will say is I'm curious for you, because again, this is Michigan State University Credit Union. I know you got members that are older like me that went to school in the 80s. I smiled internally when you said that, and only died a little bit in my heart. I was like, ah, shit, that's me. But still, what is your customer base like? I'm assuming you do get a lot of students that come out of, that are in school, that open up accounts with you, and which is great, right? Because typically they're going to stay for life when you have that. But I'm assuming you also have an aging population within your credit union too.
Yep. So we come in with our average is 37. So we skew younger.
That's
younger
great.
Than the, yeah.
And that's good. 37 is good. Everybody in 2018 it was 47. I believe that number ticks up just about every year. So it's probably around 48 or 49 is the average age. So for your average age to be 37, that's good.
Yeah. Yeah. Luckily, we experienced a lot of our growth coming out of the 2000s. We've grown tremendously in the past few years, and we've done a good job of retaining people after they leave school. And the millennial population is now buying their homes, sometimes their second homes, having kids, all that stuff. So they're not, young kids anymore. They're aging and, really adopting digital as well, which has helped us move all those platforms forward. And
I also want to appreciate everybody in the comments saying go white. Please stop. I know, I understand. Anyways, we'll move on. You can keep saying that. I understand it. But to have an average age of 37, that is fantastic. But this is an important point, and we'll jump onto some of the questions that are coming in because they're really good. But the thing with credit unions, when your average member's age is say 47 or 48 years old, you can look at this statistic and go, but you can also look at it and go, yeah, which means they're in a great stage of life when it comes to, banking is more than a checking account, right? I mean, checking accounts are lost leaders. Let's be blunt. Loans, mortgages, car loans, which by the way, credit cards absolutely own it, right? Credit unions own it when you go to get a credit card loan, as far as the interest rates and everything else. So to have an older population as your average age actually isn't a horrible thing. I would say 37 is a great average age. I think Veronica at Truist just said, guess the average age is somewhere between 40 and 50. Yeah, 47, Veronica. But to have it skewed 10 years younger, that's fantastic for you. And I also believe being able to acquire the customers coming out of school. The thing with Michigan State University and say that other maize and blue university down the road, they are incredibly great universities. The engineering programs of both schools, the medical programs, the research programs, chemical programs. This is almost like SoFi, right? We targeted Stanford. You are getting a customer base that's going to be highly educated. I would assume. I'm assuming a lot of your folks have college degrees that work.
Absolutely. Yes. Yep. We have a large portion of our employees that come from MSU and other universities around. Have graduated from Michigan State and other universities, or have a relationship as faculty members as well. So very highly educated member base. Which also gives you the challenge for what you said earlier, who then expect highly contextual, real-time digital services. Absolutely.
Because that's what they're used to in every aspect of their lives. So one of the services that y'all provide, and Sid Rahar out in San Francisco saw this. So here's one of the questions coming into you, Ben. Siddharth saw that you guys switched to video banking using pop.io during the pandemic. Can you talk about how this works? How has this affected fraud numbers, and how much of this will you retain once the pandemic's in our rear view mirror?
Absolutely. So we're currently going through a pilot program right now to roll out Popeye's video banking solution. It was something that was on our radar before COVID hit, and we had to stay home. And it went from that'd be nice to implement at some point to we need to do this tomorrow or yesterday, really. And we've only had a few pilot times. We've really been focused on training up our agents to get used to, the agents we're using used to do live chat, via text, and now they're getting used to doing video. But the people who have used it so far have been highly engaged. They've been able to help them with digital transactions that they would not have been able to figure out on their own and not think to ask for help with. We taught someone how to do e-deposit with their mobile phone when they thought they had to take a picture on their phone, upload it to their computer, upload it into the browser-based e-deposit. And we showed them it's already built into the app, and they were able to walk them through it. Having that face-to-face connection allowed that member to be able to really understand what needed to happen and complete the transaction quickly. And now they're going to use that channel, and they really are looking forward to us expanding the video chat services. The video chat, we're calling it video chat, but the video banking services include co-browsing. You can include multiple parties on both sides. You have multiple employees, multiple members. You can bring in people to do e-signature. So as we're working through loan transactions, some use cases we're hoping to expand into are mortgages, business lending, financial advising, and some of our specialty account trusts and other things like that are more complex. And some of the use case and the target, of course, there are people who are out of state that we serve as our members, but there are also people who can't necessarily get to the branch on their own. They may be an elderly person that relies on a family member to get them to the branch, and if they no longer have to wait for that family member to be available to take them in to do whatever banking they have, it gives them back the independence. It could also be, someone who's caring for someone at home, or someone, whether that's a small child or another family member. They may not be able to bring everyone in the car down to the branch either, and they're able to do those transactions from the comfort of their home. And then you don't spend 30 minutes getting ready driving for a 5-minute transaction to come back. You spend 5 minutes doing the transaction and go back to your life. So we're really hoping that this is beyond just the stay-at-home time here. Yeah. It allows us to engage, of course, when people can't come into our branches. Part of the stay-at-home order was we had to shut our lobbies and really limit transactions to the essential services needed. So that loses some of the opportunity we have to engage with our members and have that great understanding of our membership base.
Yeah, I'll be really curious to see what banking engagement is going to be like over the next few months. I mean, it's not shocking that digital banking saw such a massive increase over the past few months across the U.S., right, across credit unions and banks. I don't think anybody's shocked by that. I'll be curious to see what foot traffic does look like as we continue to open up.
Absolutely.
I think we've already showed that working from home in a lot of cases works, thankfully. But I still think people like the engagement of actually being able to talk to someone and see them in certain circumstances. I know, and at credit unions especially, that's one of the draws, right? Right. Where I live, there's a ViStar credit union that sits on a street corner, and it's surrounded by a Wells, a Bank of America, and a Truist. Mm-hmm. And on a Saturday, it looks like there's a massive party going on at that credit union. Right. That's when everybody comes in, right? Your foot traffic on a Saturday is ridiculous.
Absolutely. Yes.
Yeah. So it's the same everywhere. Another great question. This one is from Jarrett Mitchell. And Jarrett, hopefully I said your first name right. Due to the pandemic, we've seen a big forceful push towards digital. Yes, we have. How do you view branches changing in the future? Do you think the foot traffic will ever bounce back to what it used to be? And how is MSU Credit Union preparing for the future of physical branches? Great question.
Absolutely. So kind of two parts to that. So we were preparing prior to pandemic to engage our members with, digital touchscreens, interactive technology. So while they're waiting, while they're doing their business, there's other things to kind of augment that experience and kind of bring technology to them in the branch and let them experience digital while being in the physical world and really use digital to augment that experience. Now we've gone through an experience where people don't want to touch things anymore. So what does that change? How do we reevaluate that strategy and make those still comfortable experiences and still get people engaged in those ways digitally in the branch. We've seen a demand increasing for our branches now that they've been able to open back up. We are doing the things that have been recommended by the state of Michigan and CDC and others to protect our employees and our members coming in. Installing the plexiglass screens, wearing PPE, all that good stuff. So it'll be interesting. I think people will use the branches probably as much, if not more, as they've been in the past, because there is some comfort to having that branch there. And you would think it's college kids, millennials don't come into our branches. Sometimes they're some of the more frequent visitors to our at least local branches local to the campuses, because they are the ones buying their car for the first time. They're graduating. What do? They may not know how to use a credit card, or that they need to pay it off. And we provide a lot of robust financial education as well, and financial advice. So people are going to come into the branches for complex transactions, for things they're unsure of, for that reassurance, that face-to-face. Hopefully some of the video banking provides some people an option if they weren't comfortable coming in. But people will still come in. But I think there's been a lot of comfortability with some digital solutions that have been adopted over the course of the stay-at-home order that will be behaviors that stick. We don't deposit our paychecks every Friday afternoon once they get paid. We either have direct deposit or we deposit the checks we get. So the branches are really already moving towards that universal model where we can really be an advisor and discuss your financial situation with you. And we're having longer transactions, but we're still seeing a good volume.
Yeah, and I think especially for a credit union like yours, right? Like I've got my daughter Alex, whose bedroom I'm in right now. Everybody, that's why the A's are all behind me. Is about to head off to University of Central Florida. First time, that she'll really be on her own. And trust me, she'll be walking into the branch of the institution that she sets up there. It'll happen. I think we say that constantly about a younger demographic, that they'll never go in. They still will. But like you said, Ben, it's going to be for more complex engagements, which means your branch staff has to be that much better, be able to get access to data in real time. And you're going to have digital products that support them, because this little brick will be her bank. I mean, that's reality. And what I love about credit unions such as yours, y'all know that and you recognize it. And to say that innovation isn't happening there, or that you're just 100% dependent upon the vendors you engage with. You said the size of your tech team is what, like 40 strong?
Yeah, so our development team is 40 strong. We had 100 in IT almost.
Yeah, so I mean that's large, folks. Compared to say community banks. I mean, Jill Castilla, who we've had on before, she only has 55 employees, period. So trust me, that is good size. All right, I do need to give a shout out to Michigan State. I love giving it a hard time. Thank you all for putting Go Green, Go Blue in there. Michigan State has produced incredible folks like Magic John, Damon Green, Dan Gilbert. Founder of Quicken, I believe, is a Michigan State graduate. So there you go. They deserve the shout out. And yes, everybody, I am wearing a Michigan t-shirt. It's hard. It's how I grew up. But I respect Michigan State. And I really do. I respect credit unions. And I know what job that you face, Ben, and what you're doing. So I got to applaud folks that are able to roll something out, even like the video chat service that you provide that quickly. That's hard to do. I mean, it really is. So that said, where's the best place for people to find out more about Michigan State Federal Credit Union? And if they want to get in touch with you, Ben, what's the best way?
Absolutely. So msufcu.org is our website, best place to connect with us. You'll see all our options there for further communication. And then I'm on LinkedIn. That's probably the best way to get a hold of me if you want to connect. Happy to chat with you all more there. All
right, Ben Maxim. Again, such a cool name. Your parents, well done. I got Samuel Earl Mall. So, Ben, you won the lottery there. All right, everybody. Tomorrow, we are joined by Nancy Durate. If you don't know who Nancy Durate is, she is easily one of the best public speakers that you'll see. She's one of the best authors that you'll see. Nancy figured out that PowerPoint and talks and storytelling were going to become integrated across the digital world. Way back when, she actually did the slides for Al Gore's An Inconvenient Truth, which I do believe won an Oscar. So basically, Nancy won an Oscar, and we'll talk about that tomorrow. If you know anybody who should come on and be perfect for the show, don't hesitate to reach out to us. You can reach out to me, Sam Mall on Twitter, or Sam Mall on LinkedIn, or Sam at 11fs.com, or reach out to The Breakfast Show at 11fs.com. Everybody, thanks for being here today. We'll see you tomorrow.